Hello, folks, and welcome to the weekly Macro Roundup, where we highlight the top macroeconomics and financial market events for the week. Let's dive into the details. In the United States, the Trump administration has proposed tariffs of up to 12.5% on imports from 60 countries after determining they had failed to curb trade in goods made with forced labor. This was rejected by U.S. trading partners. The U.S. ISM Services Index rose to a 3-month high in May, but business input costs grew at their fastest pace in nearly 4 years. U.S. personal savings rate fell to a 4-year low of 2.6% in April, while unemployment rate flatlined at 4.3% in May. Major equity market listings were launched, from Elon Musk's Starlink to Anthropic and Alphabet, while U.S. consumers turned to savings and debt to cushion the impact of rising gas prices. The Chinese government continues to clamp down on overseas investment by locals and implemented the regulations on the protection of trade secrets, which for the first time explicitly includes data and algorithms within the scope of trade secret protection. The official manufacturing PMI fell back to the 50-point mark in May, indicating a slowdown in manufacturing activity as the global energy crisis hit the republic. Crude imports from the U.S. are mitigating the impact, but the unfilled demand remains significant. Chinese banks raised the dollar deposit rate to drive more dollar savings to boost its supply and quell the appreciation of the yuan. The push for interest rate hike grows in the Eurozone as gas shortages continues to impact the region. The faltering growth would not be a bother. Gross domestic product fell 0.2% between January and March, Eurostat said, compared to an earlier estimate of 0.1% growth. Reacting to the energy crisis, only a third of the Eurozone's largest companies have indicated they are raising prices in response to the Iran war. The EU is gearing up to warn its citizens and companies about a potential trade war with China as the bloc starts weighing new restrictive measures against Beijing. The European Commission will delay the introduction of a new market risk capital framework for banks for 3 years to see how the US and Britain implement the same international standards, it said on Thursday. Canada's unemployment crisis softened in May, with unemployment falling from 6.9% to 6.6%, thanks to strong hiring in the hospitality and leisure industry due to the World Cup. USMCA negotiations remains a concern for the government, as they now push for the cycle to be every 15 years. Canada's labor productivity declined for a second consecutive quarter, as hours worked increased while output declined. Business sector productivity fell by 0.5% over the first 3 months of the year, Statistics Canada reported. Calls were made from the Bank of Canada to the public not to panic over last week's growth data, which pointed to a technical recession. The recession is only technical, and that's all it is. UK political chaos remains center stage as Manchester City Mayor Andy Burnham openly declared his intention to jostle for the PM role, with Keir Starmer open to putting up a fight. The country also revised its oil price forecast up to $100 per barrel, stating that even if the Strait of Hormuz opens, market correction would take at least 14 months. As the fiscal position remains worrisome, calls are being made to the Treasury to sell gilts to ordinary savers who have a £2 trillion portfolio ready to be tapped. On the Bank of England part, a hold decision through the year is now deemed as cemented, given the inflationary pressure in the region. And that's a wrap for this week. I hope you enjoyed the review. Kindly remember to like, share, and subscribe to support this channel. Cheers!